What are the pros and cons of investing in real estate? The pros are you get a non-correlated asset. If Dow Jones or the stock market drops significantly, the value of a property the next day is going to be the same as it was the day before. The cons are it is an illiquid asset. So when you buy an apartment building, you can't redeem your money the next day. So because of that, there's what's called an illiquidity premium. So to invest in real estate, you should require higher returns than you would in buying a stock where you can liquidate it the next day.
The investment strategy of Tryon is to buy value-add multifamily assets in high-growth markets. We chose the multifamily asset class because we feel it is the most stable, best risk-adjusted return in real estate. Retail has been like a falling knife. Office has had major issues with turnover and remote and work from home. Multifamily continues to outperform all other asset classes. We are selling several properties right now with 20+% returns, and we continue to remain bullish on the multifamily asset class.
Beyond just the income and expenses, rent roll, and the P&L of the property, you have to look at the bigger picture, where it's located, what schools are in the area, what jobs are in the area.
Going more micro, we love an asset that is heavy value add, that's been owned by the same group or individual for 10, 15 plus years, and they haven't put much capital back into it. The asset is tired. That's what we call a blank canvas value add play. We can go in, we can do a common area reset, we do the exterior, we do the interiors of the units, we do amenities, and that's where we achieve the highest returns.
The reality of housing in the United States is there's a gap in the marketplace. Anything that's been built in the last handful of years overwhelmingly has been Class A housing that's trying to achieve top of the market rents. It's impossible in most markets to build Class B housing. So what we do is we take older, unrenovated properties, B-, C+ assets, and convert them to B+ housing. And there is a strong demand for newly renovated, modernized housing for individuals that can't pay top of the market price.
Most of the deals we work on are off-market. Broker relationships are very important. We have relationships with sellers as well. And over the years, those relationships really build into value and really build into opportunities. And as Tryon gets more and more years under its belt, those relationships really are what drive the opportunities.
A lot of our peers in the industry, they outsource everything. They outsource their property management, they outsource their project management, their construction, their property level accounting. They virtually do nothing but acquisitions and some administration in-house. We are the exact opposite. We believe in insourcing, we don't believe in outsourcing. We feel like we get much better management, much better operations. We can drive net operating income significantly higher, which ultimately drives the value higher of the asset.
I think we have a really great proven track record, and that's a testament to our underwriting. And I think sometimes, even though it seems like we're being conservative, we have our investors' best interests in mind. And what's exciting for us is when we see our projections surpass.
I do invest in Tryon properties, and many of the employees also invest in Tryon properties. And Max and Mitch, our two co-founders, have nearly all of their net worth tied up in Tryon Properties operating company and its assets. So one of the reasons I find compelling to work here and also invest my money here is I personally am not aware of any company whose principals and employees have better alignment with their investors than we do here at Tryon.